Let's get started the show and answer all those stock-related queries with our experts for today. We have Ashish Kyal, Chartered Market Technician and author at Wave Strategy Advisors, as well as Gaurang Shah, Senior Vice President at Geojit Financial Services, joining us on the show to answer all those queries that you all have sent us. First up, let me get started with the first query. We have Umesh Jain, who's writing to us from Madhya Pradesh. He holds 300 shares of OLA Electric, price is 25 rupees per share, asking if he should stay invested in this or maybe switch to another stock.
Absolutely. Ashish, coming to you, right? I mean, Ola has seen a lot of issues, from sales falling, losing market share, governance issues. The stock has seen a lot of issues happening over there. So what's your view on the stock? Any levels to watch out for?
You, all the viewers, and Gaurangji as well. I concur with his view that the stock has not done anything, and it has been correcting from the levels of 70, now quoting below 25 as well. So the overall trend is bearish. I would suggest to avoid being in the stock or to average it. Do not even think of doing that. It's better to be diversifying from here. On the upside, the stock has a major hurdle, which is around 26. It needs to cross 26 for any kind of bottoming formation. Until then, it's better to be out from here and invest in something like a Hero Motocorp or other two-wheelers, or maybe Tata Motors at this level looks much better.
All right. So to look at a different stock is what you're saying. The next query coming in from Karan Kapoor, who's writing to us from New Delhi. He holds 200 shares of Eternal at 250 rupees. He's currently making a loss. He asks whether to hold or exit at current levels.
My suggestion would be hold. His buy price is pretty decent because 250 rupees, the stock has been correcting from around 310 levels, and 250 looks very much near around very bought. So hold on to the stock here. Over short term, we are seeing some pressure, but I think eventually the stock should move back towards the level of around 300 on the upside. On the downside, the support for the stock is around 227, where stop loss can be maintained.
We'll keep an eye out on those levels over there for Eternal.
If I can go to our other guest as well to ask Ashish about, these two stocks. We've got Chambal Fertilizers and we've got Vikram Solar. What is your view on these stocks?
Chambal Fertilizer has been consolidating between the range of around 470 as a resistance on the upside and 425 as the support. And it's moving in that range. So right now, hold on to the stock that you have, and if it manages to break 470 levels, we can expect it to go towards the level of around 520 on the upside. So hold is the recommendation, with the support and the stop loss, which is going to be 425. As far as Vikram Solar is concerned, my suggestion would be to be out from here. The stock has been falling since the high was made around the levels of 400, and since then it has not recovered anything on the upside. It is best to be out from Vikram Solar. And we can clearly see that post the tariff implementation again on the solar panels, we have seen a substantial down move in this entire space. So it's better to be out.
Okay, so but better to be out from Vikram Solar is what you're saying. The next query is coming in from Parag Joshi, who's writing to us from Navi Mumbai. He holds 60 shares of JSW Energy at 628 rupees. He wants to know if you should buy more or average or hold. He's currently making a loss on that.
Ashish, your view for JSW Energy, buy, average, or just continue to hold? The viewer has bought it at 628.
My suggestion would be, at these levels, one can look forward to average. We can see that the entire energy space is again reversing back on the upside. JSW Energy has formed a very big base since around Feb 2025. It has been moving in a range, and eventually it should give a breakout. So average can be done at the current levels, but maintain a strict stop loss of around 450 levels on the downside. On the upside, we can expect the stock to eventually break out 550 and head towards its cost price of 600 above, and we should be able to see that again.
Okay, surely we'll keep an eye out on that. Maybe it can look to average is what is the word on the technical as well.
Absolutely. So the next query is coming in from Sriram Raghuraman, who writes to us from Chennai. He holds 25 shares of Cupid at 91 rupees, and he wants to know the one-year prospect on the stock. Ashish, he is making a profit on this stock. Any key levels that he needs to watch out for?
See, the overall trend for the stock is broadly in a range. We can see that the stock has been finding a hurdle on the upside and is currently trading around 385. The support on the downside is at 364. Hold on over here with 364 as a stop loss. And on upside, we can expect the stock to cross that 450 mark and possibly reach towards 500 again.
Okay. Shalin, we'll keep an eye out on these levels over there for Cupid. Let's move on then to the next query. We have Govardhan, who's writing to us from Bangalore, and he wants to know the future prospects about specialty chemical shares, Deepak Nitrite, Laxmi Organic Industries.
What about Ashish? What's your view? What's your take on this sector? And is it the right time to sort of enter these two names, Deepak Nitrite, Laxmi Organic Industries?
See, I would recommend not to enter into Laxmi Organic. The stock has continuously moved down and has not shown any kind of a positive traction. But Deepak Nitrite is forming a triple bottom kind of a pattern. There is a low which it created at 1516 levels in December. Then again in the month of January, and again it's today showing some kind of a bounce back activity from those levels. So it's a very important support zone. 1510 should remain intact on a closing basis, and we can expect the stock to move back towards the level of 1700. So if one wants to enter, can enter now, but maintain a strict stop loss, because if 1510, 1511 is broken, there can be more pain left on the downside.
All right, so maintain a strict stop loss is what you're saying.
Can look at from the defense perspective. Ashish, your view, ZEN Technologies, is that a good bet, or would you also suggest some other names on the defense side?
No, I would suggest to be out from ZEN Technology. The stock has been moving in circuits. We can see that happening in July 2025 when the stock crashed with lower circuits. Since then, it has been consolidating in a very, very narrow range. It's not going in any direction. The volumes have been erratic. So it's better to be out from ZEN Technology, and maybe something like a BEL should be a better choice.
Okay. Some of the other names that even you have highlighted, Ashish. Thanks so much for that. Next question from Punitha, who's writing to us from Tamil Nadu. Holding 200 shares of Shakti Pumps, price is 700 rupees per share. Long-term investor, wants to know if he should continue to hold, sell, or average. Ashish, your view on this one?
See, Shakti Pump had a very important support of 560. The stock has broken that support level as well and is not showing any kind of positive attempt. My suggestion would be maintain a stop loss of now at around 455. That's the low which it formed today and bounce back. So 455 can be a very important support. The stock needs to prove itself by going above that 570 mark. That's far away, but there is no in between. There are no other levels. 570 is the only resistance level which it has to break and cross above. So hold with a strict stop loss, and 570 needs to be crossed from here on for Shakti Pump to perform well.
All right, so hold with a strict stop loss is what you're saying. All right, Ashish and Gaurang, we're completely out of time on the show, but thank you so much for joining us and answering all of our viewer queries.